Okay, hello everyone. Today is Tuesday, January 20th, and I'm Michael Boutros, currency strategist with SB Trade Desk. Guys, good to be here with you this morning. If I could just get some confirmation that the audio and video feeds are working properly, guys, we'll go ahead and jump right in. AV works great. Petro, Eileen, great to see you guys. Dale, Permendra, good to see you in the room. Jay Jackson, Roy. We got Dale in the house, the whole crew. All right, guys. So, lots to talk about as we start this shortened week. On the back of yesterday's Martin Luther King Day, didn't really get much play in some of the crosses, although the ones that we've been focused on, we have been seeing continuation. So, first thing we want to do is go over the scalp log on SB Trade Desk. We'll go over the dollar-yen. The Aussie dollar hasn't really given us much play. At least since the start of the week here, but and we'll take a look at the sterling CAD as well. Once we get through the setups, guys, as always, do feel free to throw out any questions, trade setups you guys are looking at, strategy questions, and we'll be more than happy to go over those as well. All right, let's jump right in. So, since last week, we have been tracking this dollar-yen. I think the upside starts to come into risk here with today's rally, but I gave you guys an update on this one last night. You know, I didn't catch this last move into the 118 barrier just above. We were looking at this move into 118.18. I missed this stretch here, but we did take a long on the open of Sunday trade. Yeah, a nice trigger and momentum here as you continue to hold above. The near-term bullish and validation level was 117 into 116.95. This one in blue right here actually represents a 618 extension. And you also had the lower median line parallel there as well. So that was a great place to put a stop. We scaled out on the rally here as this thing was a real slow burner. We got out the rest right at 117.55. This last stretch here didn't really have much of a trigger on the upside. But long story short, we've now broken through this, and the long side of the trade starts to become at risk as you head into 118.91, and that's the 618 retracement of the decline. And also, based on where we are in time, you'll be looking at that median line off the lows that we made last week. All right, here's what the dollar-yen looks like right now. By the way, the bullish invalidation level last night was raised to 117.55, and at this point, we're going to go ahead and drop that, or raise that rather, to 118.18, this region right here. Here's what dollar-yen looks like on the daily and the 30-minute. So, the timing might have been off on this target here. I posted this chart ahead of the open on Sunday. You know, you might get up here a little bit earlier than anticipated. What we're basically looking at, guys, here is the trendline resistance that dates back to the highs of the year, or this, I guess, the December highs, and that 618 retracement off of the high that we made from that swing high in December. Okay, so that might be, looks like it might be coming into, focus here over the next couple of hours, possibly into today's close. But 118.91, this is your risk right here. Okay. From that 618 into that trendline resistance. So we'll see if this thing offers a turn or not. I think the trigger break here, you're going to have to wait to see what the close looks like, but we have finally made it above this 3-point trigger as resistance, back above 50. So you want to be cautious about trying to fight the short side of the trade yet, but we are looking for signs of exhaustion. Here's what it looks like on the intraday. All right, so, excuse me, the pullback here early in the week, couple hours into Asia trade at 117. Again, there was a trigger there that didn't really pan at the best point, but the point being is we actually front ran that trigger. I posted the chart, guys, with the actual entry on this for the 5-minute to show you what it looked like. Maybe we can go back into that real quick again. As you started off the week. And again, on a move like this, right, where you're coming right into that key support target, you're making some divergence into the lows. So again, remember, divergence is only represented by the close of each candle. So if you bring this to a line chart, lower low, higher low, followed by a trigger break. Again, these are going to be my preferred plays, guys. 9 times out of 10, I will take that execution on that trade with a trigger like that. Stop is well defined, just below 116.95. Again, we scaled out. As we head into the initial opening range low for Asia, so I took some off here, and then we got back above 117.55, and this is where we actually got out of the rest. The trigger for this move, what I was telling you in the report last night, didn't really have, or wasn't really all that well suited. This is the trigger I would have been looking at, okay? And while the trigger looks very compelling, The only thing that I wouldn't have been confident with was where to put your stop on a trade like that. Okay, so even if you took this entry 117.56, you're just below resistance still. So even though you got the trigger, you didn't see the complementary move in price action. And remember, when we're looking at these near-term triggers, there's nothing magical about the RSI oscillator. There's nothing forward-looking about it. There's no tells on it. We're just looking for this oscillator to confirm what we're seeing in price. So while this trigger was really well formed, well defined, very clear break taking us through 60, price didn't clear resistance, and at the same time, your stop would have had to been below that session lows, which was 17.36. So right off the bat, you're working with a 20 pip stop. 20 pips doesn't even take you out of that resistance range. So it was a little bit harder to catch that last stretch there. Long story short, though, here's where we are at this point, guys. So watch that 618 retracement just higher. Again, 118.95 is going to be, or 91 is going to be the actual region. Also taking a look at this trendline resistance here as we look into the close today. All right, so you can imagine a scenario where you still push a little bit higher into 119.95. You have a momentum trigger here that I would be working with for the dollar-yen. Again, some divergence into the highs, and there's your trigger. Okay, so as you head into the open of U.S. trade, guys, if this thing spikes into 119.11 or if it tries to make a run on this region here, we'll be looking for a subsequent break in momentum to get us back on the short side. Initial targets right back down here into 118.18. If you're holding long side exposure, again, like I said earlier in the session, guys, you're going to bring in that bullish invalidation level up to 118.18. So if we break back below this, the long side is going to be invalidated. And right now we're just looking for an exhaustion high possibly over the next couple of hours into the open of U.S. trade. I would say this is probably our second best performer so far over the last couple of weeks. The sterling CAD has really been giving us the most play, the most bang for your buck. But that's the current outlook right now for dollar-yen. Questions on the yen, guys? Eileen says, where is the 618 on the 30 minutes started for dollar-yen? Oh, so this 618 right here is just right off the highs that you made on that December 23rd stretch. Does that make sense, Eileen? Simple retracement of the near-term decline off the December highs, or the late December high. She says, okay, thanks. Right on. All right. So, if there are other questions on dollar-yen, we will move on. DB says, Mike, what are you expecting A, B, C, D, E triangle to play out before the thrust above 122? So I'm not really huge on Elliott, DB. You're probably going to want to reserve those questions for Jamie. I definitely think you do eventually get the resumption, but I'm such more near term, I'm not really going to stress the ABCD count or the Elliott wave per se. What I can tell you is we're definitely waiting for this triangle break, right, to put the long side of the bias back in play. Remember, the primary trend, guys, and this is something we talked about to start off the year, the primary trend for dollar yen still remains heavily weighted to the upside, specifically post, the Abenomics and all that election nonsense that's out of the way, right? Expecting further easing from the BOJ. If they're going to attempt to actually achieve that 2% inflation target, they still have further to go. So the upside is still in play. The question here is, does this consolidation open up the doorway for a deeper decline, maybe into like 114 before this thing turns around, or is this the magnitude of the setback? I'm of the mindset that you still might actually get a deeper pull lower here. Remember, 100 off the high actually looks for a target right around 114.50. So if this is a two equal leg down type correction, that's what I'd be looking at. But to answer your question, DB, I'm much more shorter term in nature. So I won't be necessarily looking to plan out the entire progression of the correction. Our biases shifts on a day-to-day basis, and right now, while the long bias has been in place since last week, I'm starting to move off that train, looking for a possible exhaustion high near 118.90 near term, and then we'll look to play this little pullback possibly. Does that make sense, DB? He says, got it. Thanks. Right on. All right, brother. So let's move on. If there are no other questions on the dollar-yen, next trade we've been following here on the scalp log is the good old Aussie dollar. So a little bit lackluster to start off the week, guys. So what I wanted to say is this: the break that we saw yesterday, and I noted this yesterday in the report as well. The break that we saw yesterday technically shifted the short side into focus. Okay. But I wrote that we were reluctant to jump on board on that because of the broader picture for the Aussie. Remember, that 80-80, 80-60 threshold that we're holding since the start of the year is a massive area of support. I've showed you guys all this before, but if you look at the weekly chart for the Aus, it's a pretty big region. Okay, it's a pretty big region of support. You're looking at the 2010 lows. You're looking at the 1618 extension from the decline off the 2011 high. And near term, while you're above this, I'm really reluctant to play any medium-term short exposure. In fact, the longs that we took last week were really well suited just on the premise of the fact that you were pushing against this key region. Okay, so just keep this in mind. 8116 is really where the support zone starts. Excuse me, but obviously the 2010 low is really the focus, and that's right around 8065. So with this in mind, here's what the Aussie Dollar daily looks like. Okay, we broke above this 82 barrier last week. Remember, we were looking to play alongside. That was the near-term bullish invalidation level. We continued to wobble against it. We held above it into the close, but really, there's really no play here, guys, until we break out of this trendline resistance dating back to the September high to get you the confirmation for the upside bias, okay, or a trigger back to put us on the short side against this region with a move back below the 82 handle. Okay, it's going to be easier to explain this, or easier to visualize this on the 30 minutes. So let's just jump right in. So here's where we ended up last week. Okay, last week we pretty much almost closed unchanged on the session, guys. Okay, this is where we closed 82.20 or so. We opened up right around the 82 handle, 82.10. Okay, so this is what I was talking about for yesterday's piece. This technically puts us bearish. All right, a couple of different reasons. A, it is a break of the initial weekly opening range in and of itself. Okay, and B, you got a really clear trigger break here in momentum. So you got a 3-point trigger. That's going to be a nice confirmed trend line. You had a break of support in price, stop against 8116, looking for the move into 8160. Would have worked. Okay, would have worked. And certainly on the back of the data that you saw out of China last night, it was a little bit mixed. The GDP data was really more so mixed than anything else in the retail sales or industrial production. But, you saw a quick spike right back into the 82.11 region. We came right back into support. Long story short, this is the reason why we're reluctant to play the short side, even though that broke. Okay? So I'm still looking for a little bit more of a conviction turn. This was an encouraging break that you made here in overnight trade. Obviously, again, this is another example of where the break in momentum didn't really offer anything by way of a break in price, and that makes it a non-operative trigger, right? I'll go over, actually, someone sent me an email. It was Tiffany sent me an email last night about her performance on the dollar yen. We'll go over, I just want to review that for her real quick as well, but that's the main thing I just want to stress, guys, is that the momentum triggers in and of themselves mean nothing, absolutely nothing, unless they are accompanied by a move or a break in price. Eileen says a break in price is beyond the levels. Explain that to me, Eileen. I'm not sure what that question means. So what I'm trying to say is that you can't... Okay, she says, I'm not sure what you mean by a break in price. Perfect. Okay, so this is what I mean. If you get a momentum trigger like this, Eileen, right? Look at this operative trigger right here. That break to the upside needs to be accompanied with a break in price as well. So if I'm looking to see resistance break here in momentum, then this would have been an operative trigger if the price had broken above this region higher. Do you know what I mean? So Eileen, here we saw a trigger break for resistance in momentum, but where was there a resistance break in price? There wasn't. There wasn't at all. So you want to make sure that when we're seeing these breaks, it is an operative trade. This, like I said, despite our discomfort with taking a short, was an operative trigger. Okay, you had 3-point trigger trendline support. You saw a break of it, and this break was accompanied by a break in price of support. This makes it operative. Does that make sense, Eileen? So you're looking for, all you're looking to do, guys, is this is looking to confirm whether what we're seeing in price action is legit or not. So you want to make sure that that's sort of forefront. Eileen says, okay, so the breaks are above, below support resistance area. Right, so all I'm saying is if you're looking for a resistance break in momentum, you're either looking for a break in resistance in price or a pull into support. Okay, so let's say, for example, price was coming into this low and then you got a trigger breakdown here. That's an operative move because you have a very well-defined stop. If I'm looking to play along with the break of this resistance and I see price coming through 82.10 here, I need to see a resistance break in momentum as well to confirm that. So we want to make sure that what we're seeing in momentum is confirming what we're seeing in price. Eileen says, okay, makes better sense. Thank you. More than welcome, Eileen. Good question. Good question. So long story short here for the Aussie guys, I'm kind of waiting to see what the opening range for the week does. I haven't really taken any positions yet. I'm favoring the long side of the trade. Essentially, did I note the invalidation level yesterday? The 81 handle. So all above the 81 handle, that's what I thought. We're still basically looking to play the long side. Why 81, guys? You have a basic lower median line parallel. This is from the ascent off of last week's lows, or I'm sorry, this is the December lows. And then you have a basic trendline support, which actually matches that same slope off the lows for January. And right now, based on where that happens in time, you're basically looking at the 81 handle as your invalidation for the long side of the trade. Okay, remember where we are in the broader scale of things, guys. Okay, this is basically the trend line that you're fighting against. Or if we do see a topside break, you're looking for 83.20. You're looking for more key resistance at 84.13 to 84.30 here. DB, yeah, believe it or not, my man. It's manual. Say, Mike, can you show me how I get those weekly start/end vertical dividers on the market scope charts? Does it have to be done manually rather than an auto function? Unfortunately, you do have to do it manually, DB, believe it or not. So, you know, he was just asking guys about the intraday charts. You'll see all on my intraday charts for sure. Each week we'll give you a vertical break there. Those are drawn manually. You know, just have a quick key, guys, on your keyboard, and then mine is 2, for example. So I just hit 2, drop a line, make sure it's in the background, and move your label here as each week progresses. It's actually not that bad, DB, because it helps me also keep track of what I've been following, right? So as I go through my charts, and for example, if there's no weekly divider for this week, I'll know, like, okay, right, great. So EuroCAD, I haven't even checked out this week. Let's do some research. So it's a way, it's sort of keeping a mental bookmark as well. All right. The best setup from last week, and certainly the one that's been giving us the most play, has been the sterling CAD. Gave you an update on this last week as well as we headed to the end. You know, the 83 handle is still going to be the bearish invalidation level. We were playing the longs for quite some time here, guys, until we went into 82.56. And again, you saw some divergence there and a trigger break late in the week, shifted to neutral. This is still your area of key resistance. So we're not surprised. And in fact, last night I said, you know, we're putting in some momentum divergence at the lows here heading to Asia. That actually turned out to be the low. You actually did get a break to the upside and a rally right through the weekly opening range high, and that invalidates the near-term short bias. I'm still not playing the longs, okay? I still think this thing could probably reach into 83, and that's what will invalidate the longs, the short side of the trade. I think you might actually get a better opportunity to try this short again if you get into 83. But sterling CAD, again, really nice wide range scalp, guys, giving you about 34, 35 pips per scalp. Here's what it looks like. First on the daily, and then on the intraday. So on the daily, we actually put out an outside day reversal here today. We're working on it. With a spike here coming again into that 180 handle, and the break taking us above the bearish invalidation level, which was, again, near term going to be 81.55. 83 puts the longer side of the trade back in focus. Okay, here's 83, guys. 786 from the August high. It's a 618 extension off the lows. Okay. It's the high day close for December and the median line off of that September load. All are jacked up right here. Okay, so it's going to be interesting to see how today pans out. The momentum signature, although we've been playing the long side here, guys, still looks pretty constructive. I want to see that 60 break, but on the pullbacks, nice turns ahead of 40, turn ahead of 50 is even stronger. We're going to see if we get that 60 break with a move above 83. That puts the long side back into focus. All right, so Sterling CAD really primed here, and I think prepped as we head into the 83 handle. You might get an opportunity. Like I said, we'll be looking for triggers. We'll be looking for a hold. If that gives the opportunity to play the pullback, we'll jump into a short. If it breaks through, I'm not going to play the initial breakout, wait for a pullback, and then we'll see if we can target that 84 handle. Here's what the scalp looks like on Sterling CAD. All right, so again, there was that divergence that we noted in yesterday's piece. Former trigger break broke as resistance, takes you out of the short side of the trade. Here's the opening range break for the week. And here again, look to see if we can get any resistance as we head into that 83 handle. Questions on Sterling CAD, guys? To put things in perspective here. Again, as always, if you are new to the sessions, guys, a quick reminder also that you can click on this camera here in the top right-hand corner of your GoToWebinar screen to save any of the charts or analysis that you see throughout the course of the webinar. It's a quick reminder. All right, so now testing interim resistance. Again, as long as the oscillator stays above 30, guys, it's really hard to use any triggers here on the upside. So I think we're going to have to sit aside here for a while and let this thing pan out. Really healthy range, so I'm willing to forego a little bit of price action to get the conviction. But certainly if this thing pops through 83 and closes above, guys, we're looking higher. Looking higher, looking right up into the 84 handle, essentially. Questions on Sterling CAD? Adria says, can you explain outside reversal, please? Sure. I mean, there's really not much to it, Adrius. An outside reversal simply means that you have taken out the previous session's lows and turned around and taken the previous session's highs out. Okay, and a lot of times, Adrius, this can happen on turns, major reversals, major highs, exhaustion, things of this nature. Okay, let me know if that makes sense. These outside reversals, Adrius, can happen on the lows, or they can happen at the highs. Okay, it's not necessarily going to be just just on the way up. It can happen on the way down too. But for example, on the pull, today's candle is a reversal candle because the last three were bearish, right? And the price action today has taken out the previous session's lows and the previous session highs. And again, these can be very, very strong indications for reversal patterns. It's much more significant when these reversals and outside day key reversals happen at the lows and at the highs. It's much more significant. You put more emphasis on something like that. But again, just another tool in your technical indicator box. Adrius says, I can read it all day. It helps when I hear it. Thanks. Yeah, Adrius, I'm with you 100%. Sometimes sort of seeing it in front of you and having it explained is a little bit easier. So you're in the right place, brother. All right. Moving right along. I see a question here from Mark Lavender is saying 30-minute or day close above 83. Good question. So, Mark, when we're looking to invalidate the medium-term trend or the broader what's happening in the near term, you're going to have to see a daily close, above 83 to get the conviction for a break. Because here's the last time we tried to poke through 83. Look what happened, Mark. We closed right there, and then this thing collapsed. So you don't want to use intraday price action to make assumptions about breaks of major key resistance or major key support. All daily support and resistance levels need to be invalidated via close of the daily candle. So, Mark, great question. Hope we're on the same page with that. Now, intraday, Mark, if you get a support trigger break on an exhaustion stretch, I'll be more willing to play the short side against that. But certainly, to play the long or to play the breakout scenario, yeah, you would need to see the close for sure. Or at least that's how I play it, Mark. Hope that offers some clarity. It says, got it, thanks. More than welcome. All right, and there was another question here as well. Eileen, there says sterling running up too. So one of them, again, was about to move right on to that. Sterling CAD, we were looking at this push. Again, we were looking for the 83 handle. Sterling dollar also seeing some strength here. And this is what I posted last week on Daily FX, guys. So we might have been a little bit too early. We actually posted a topside bias above 51.70 heading into the Thursday trade session. It broke to the downside and actually gave us a pullback right into key support, which is 150.83. Again, 150.83, guys, just for your consideration, is not only a basic 88.6 from the retracement off the lows that you made in 2013, but more importantly, it is the 2015 low day close. Okay, so right off the bat, near-term price action is offered, that being a near-term support target. So long story short, this is the formation we're looking to see if we break above. The close is going to be paramount. We are seeing price looking to push through it. Momentum has not. So again, an example, I think the question was from Adrius earlier about the momentum triggers. Or maybe it wasn't momentum triggers. It was Eileen. Here's a perfect example of where you're seeing a break in price, the opposite of what we saw in the other trade, a break of price, but not a confirmed break in momentum, right? So this wouldn't be necessarily an operative trigger at this point. But a long story, if we do get a close above this, we're looking for a test again of that 2009 trendline support. Former resistance, or former support, now should still provide some resistance. We already saw a bounce off this earlier this month. Okay, here's what intraday sterling dollar looks like as per last week's report on Daily FX. So this is a break of the initial weekly opening range high. This was also the invalidation level for the long bias that we put back on Thursday of last week. Again, that got invalidated right into the Friday close, guys, with the break here, taking it back below 40 as well. So here's the break back above 70. This is the first, 60 break. First 60 break we've seen since the highs last week. And price action back above the weekly opening range high. Okay, so let me zoom this out a little bit and give you some perspective of what we're looking at. Okay, so this is a different formation using the slope that you took off the highs that you made in September. Okay, and this is a median line within the confines of that formation. So that's coming into focus right here. Major key resistance that we need to break to kind of get that validation is 52.36 here for the pound, which is where we ran into last week. All right, so near term, immediately heading to the U.S. session, just like last week, guys, there is no change above 51.70. Still like buying pullbacks, buying breaks of resistance. Objective targets here are going to be 52.56 into 52.36, this region here. Still looks pretty good. Questions on the pound? Obviously got the BOE minutes on tap this week, guys, so you don't want to forget about that. That's on tap tomorrow, and also tomorrow. You do want to take note that you do have some employment data coming out. The claimant count looking for a print of 2.6%, a drop from 2.7% with the ILO also dropping from 6% to 5.9%. So we'll be seeing how that print turns out tomorrow, specifically if the pound does make it into that 52.50 barrier to the upside. Questions on sterling dollar? It's a nice run, but even on this, guys, I'm just thinking out loud here. Even if you saw this trigger break here, this is another example where, even though you got a pretty clear-cut trigger break, you really didn't have very much of a strong trade. It's not just about the signals that put us into the trade, guys. It's the whole setup. Okay, no trade should be taken just purely on a break of price resistance or purely on a break of trigger and momentum. The setup needs to make sense, and this is where your risk to reward starts to come into play. let's say you saw that trigger break here and you said, you know what, this is the first 50 break since the rally into the opening range high for the week, and you know, this is the initial weekly opening range low. We're breaking above it, so that's a long trigger. It is 100%, but where's your stop on a move like this? It needs to be down here, right? So you're going to put a 60, 70 pip stop when a quarter daily ATR is 30 pips. Now, hindsight, yeah, you would have made a perfect trade. It would have been more than one-to-one risk to reward, but that's hindsight, okay? Playing this in real time, I would have been very reluctant to play the long side just because of the lack of a decent stop price here. So some of these setups, guys, and some of the plays, you know, just don't offer the entire setup. Yeah, you got a clear signal. Yeah, the bias is pretty clear. But if you don't have that risk to reward or that proper risk management on it, you know, I'd still rather forego the opportunity than try to chase it. So just a quick note there. All right, last but not least, the trade setups we've been following on SB on the intraday trade is going to be gold. Textbook, guys. Long side was in play since last week. We said last week that we're looking for a pullback early in the week to favor long entries, and 1248 was the invalidation level, a topside break, and you're looking for a move on 1294. This was posted last week. Well, lo and behold, we came into the start of this week. You did see a slight pullback on Monday. Didn't quite get the pull into support, but nonetheless, the rally extended, and we just may have missed high 1294 on the mark, guys. Okay? So it's just such a clean trade, such a clean level, or clean levels in general. At this point, this is your risk. Okay, it's the region above 1294 into the upper median line parallel of the ascent off the November lows. So below this region, the risk is for a near-term pullback. We're going to go ahead and raise our bearish, or our bullish, invalidation level from 1248, where it was at the start of the week, right up into 1262 now. Okay, and depending on where you are in time, obviously, the median line will also come into play here as a support. Very clean move on gold. Still the clearest, clearest commodity trade in my personal opinion. Petro, which trade were you talking about? Saying you can put the stop under the blue median line. I think you're talking about the pound. Yeah, let's go back real quick. You could have. And again, guys, I don't want to necessarily dissuade you from taking this position. If you've got the risk, what's the word? If you've got the risk tolerance and you're willing to trade like that, certainly. I'm super near term, so I'll try stuff like that all the time. On this bounce right here, I'll look at 1 minute price action. If I see a trigger, we'll take a stop against this, just looking to play this range here from like 150, 140 into 60. I'll do stuff like that all the time, but broadcasting a setup and broadcasting a strategy with the setups that you're trying to play, I really can't advocate too much trying to get aggressive with trades like that. Do you know what I mean, Petro? That's how I trade, though. By all means, on a break like this, yeah, I wouldn't have taken this stretch. On a pullback and test of support on this candle, for me, would have been the entry against that swing low, sure. But the only issue, and the only thing I want to take as a side note, Petro, just as a disclaimer, okay, when you're taking stops against trend lines, whether they're median line analysis, whether they're basic trend line support resistance, it becomes a little bit of a gamble because you never really know how deep the throwover can be. Okay, and this is where you place your stop an arbitrary amount from that trend line. It might be just enough where it triggers the stop and then comes back like this. If you put a stop against this trend line here, again you might have gotten stopped out. Do you know what I mean? So trying to place a stop against a trendline resistance or support is always going to be more difficult. It's always going to be in your best interest to try to place that stop against a higher low in price as opposed to a trend line. So that's just a quick side note, Petro. As a disclaimer, I have done that before, but they tend to be on pairs where there's major key support. Right? You have a previous daily low day or high day close. You have a longer-term 618 fib. You have a multi-year trendline support or resistance. On these types of trades, sure, I'll be a little bit more comfortable trying to place a stop against the trend line. But in general, that type of risk management can sometimes be pretty messy because you'll get the run right through that level or trend line, triggers your stop, and it just washes everyone out. So keep that in mind. I hope that offers some. Some food for thought. Petra says, "Got it. Thank you. More than welcome." Okay. Mark Lavender, we're on the same page there. Great. Permendra says, Aussie Kiwi, please, if possible. Thank you. Absolutely. Aussie Kiwi. So I've been reluctant to actually touch this for a while just because of what's been going on in the respective trades. And honestly, before we even look at this, it's really the Kiwi that's sort of irking me on a position like this. We talked about the possibility for an Aussie rebound against that major key support early in the session, but the Kiwi for me is the variable here. Here's what the daily looks like, right? And we've continued to consolidate into this godforsaken range since the October high, right? So until this thing finally makes a move, whether it's going to be a downside break below 76.80 or whether it's going to be a break of the opening range high to the upside, I'm kind of reluctant on playing the Kiwi crosses in general, Permendra. So that's sort of just a quick disclaimer before we jump into the Aussie Key setup. That's my apprehension with playing anything Kiwi sort of related. Since the start of the year, this thing has just been in sheer consolidation, okay? Higher low, lower high. We continue to consolidate. So I would rather see a breakout of this region. Even momentum has continued to consolidate. It looks like you got that momentum trigger coming up here. We'll have to see what the close looks like. But in general, I want to see this thing break. That said, here's what I'd be looking at with Aussie Key. Okay, I don't really stress pivots as much. You guys know that, but certainly when the pivot coincides or converges on some other technical indicators that we look at, it does offer some further confidence. So here's the monthly pivot, which we highlighted earlier in the month. But this is really the formation I'm working with. And if we close above that median line off the September highs there, I do think you possibly see a run right into the 107.60 region. Okay, which is the lows that you made for December, and that swing opening range low break. Former trendline support, now resistance, and obviously the R1 monthly pivot. Don't necessarily stress that 786 anymore, but you get the picture. Let's see what a basic trend retracement looks like as well. All right, and last thing we want to do look at is an extension off the low and see if there's any meaningful levels above. Some interesting levels come up. Okay, so an extension off the low here highlights two things that I just want to bring into your view real quick. 106.40, nice 618 extension right off that low. On a move like this, guys, I'd want to see 106.40 give out to confirm the break of the median line, okay, because you get a little bit messy here and you don't want to stress too much, but 106.40 is what I'll be using as sort of that topside break. Levels up pretty nicely with some of the highs they made here in December. Topside break, you look for 107.15. 107.50 lines up exactly with the R1, and that's the 100% extension off the low. So if we're making two equal legs up, if this is a correction, you'd start to look for resistance right around here. Lo and behold, that level we just noted at 107.60 comes just above it at former trendline support, now resistance. So if the median line cracks, and if this is a confirmed break above 106.40, and this is longer term, guys. This is not necessarily scalp in nature, but this is basically the objective range or region you would be looking for. Okay, and again, if we close above this, the bullish invalidation level near term from the scalp bias would be right at 107.60. Okay, because over the next few days, that would necessitate a break of the median line, the pivot, and that basic 236. Okay, which is also the initial weekly opening range high. So we'll see how today pans out. It looks very interesting to me. I would love to play this, especially if the Aussie gives us a confirmed break of this daily resistance. Okay, so we'll have to see. That's sort of the scenario I would like to play for the Aussie Kiwi, though, in that type of break for Aussie strength. Let's see what the 30-minute looks like, shall we? Here is your weekly open. Okay, we don't need these anymore. 38.236. And then we'll take that same extension we did on the daily chart. Not bad, actually. I'm going to go ahead and leave all those levels on there. But you get the picture, right? So looks like we made a break of that trend line or that Andrews pitchfork resistance just now, or the median line rather. So I'll wait to see what the close looks like. I want to see a push above 106.40 to get this confirmed. Topside objectives with such a play, you're basically looking at 107 is what we'll say. I won't stress that 786, but more so I'll be looking at that upper median line parallel. Again, confluence to the 38.2 comes heading into tomorrow. Okay. And as far as Aussie data is concerned, here's what the Aussie data looks like so far this week. Keep in mind, you do have Westpac consumer confidence data tonight. More importantly, be looking for that CPI data, and that's going to be on the 27th. So you still have a week or so before that major print comes out. But certainly looks very interesting, Permendra. Hope that offers some clarity here on Aussie Key. Definitely be keeping an eye. Definitely keep an eye on this for sure. Permendra says, thank you, sir. Chintan says, how do you exercise this, man? Cheers. I appreciate that, Chintan. Many, many years, my friend. Many years. So, Chintan also saying, Mike, I learned a lot from you and Jamie, drawing charts perfectly as per yours. Still miss the entries because can't handle too much charts. And guys, that's a really important thing, okay? This is 142 pip run is from the low. Yeah, absolutely. Chintan, were you in that? Cable making 142 pip run. Oh, you're talking about cable today. Daily ATR is 106. It's nice to take a short base on a 5-minute momentum trigger to the downside. So Chintan, here's the thing I want to say, guys, really quick. Listen, if you're scalping, I have no problem with taking an intraday counter trend trade. No problem at all. Okay? If you're coming to major key resistance, you have a downside trigger, great. Let's go ahead and take that. If it gives us 10 pips, I'll take those 10 pips in my pocket all day long. But it's a huge B, Chintan. We want to make sure we're not running into this really bad habit of, okay, there's resistance here, I'm just going to hit the short. Oh, the dollar yen's coming to resistance, I'm just going to hit the short. That's not how we want to trade, guys. It's a quick way to make a huge disaster of things, okay? Just because a trade is coming into resistance doesn't mean it's going to be a short entry. It could just come and sit into resistance for a couple of hours, right? And then break right through. You don't know. Which is why for me to take a counter trend trade, for me to take the opposite side of the intra-week bias, there needs to be something to tell me to do that, okay? Never going to take a trade just sheerly based on the fact that we're at resistance. There needs to be something to indicate, okay, right now, market's probably going to double back on the intraday bias, okay? Whether that's a momentum trigger, whether it's a break of the session opening range high, whatever. There needs to be something to shift my bias from the long side, if my bias is long, from the short side, if my bias is short. Okay? And the other thing I do want to note is I lost my train of thought. But Chintan, does that make sense? I hope that offers some clarity. So for example, this is what I wanted to know on dollar yen. And again, I hate to go back to the same trade again, but on the dollar yen, I did get an email from Tiffany that I do want to go over real quick. Tiffany's been working to try to really master her entries, and she shared with me this chart right here. I just wanted to review with her real quick. So one quick point I want to make on this trade, Tiffany, is right off the bat, your stop at 5 pips is extremely tight. I know we're scalping, and I'm all for trying to take advantage of near-term price fluctuations, but guys, if you're trying to get into a scalp with a 5-pip stop, you're doing yourself a disservice. You're going to end up, it might feel good to say, okay, I only took a 5-pip stop on that one. Thank God, it could have gone worse, but guys, you bang yourself with a 5-pip stop, 6-pip stop, 5 times a day, and you've just, undone a whole scalp setup. So one thing I want to say is this. So this is a trade that Tiffany took, last night, and one example I wanted to use was this: is that Tiffany, we're going against the bias here, right? We're going against the bias. In fact, we were long since Sunday. We just broke the opening range high. So yeah, it was heading into the 117, 60 region, which is resistance. But did you get a downside trigger? Did you get some sort of turn in momentum? Did you get some sort of break of a session opening range to the downside? No. Right? So this is a perfect example, Chintan, of what you were looking to say about the pound. Listen, it might pan out, and I don't want to dissuade you from taking trades if the strategy is working for you. But from my standpoint, if you're asking Mike Boutros, my personal discipline, this is not something I'd be interested in. If we had seen this momentum trigger break, yeah, sure. Hell, if we had seen this, if we had seen this momentum trigger break, yeah, sure. As you're heading into 160, yeah, sure. I'd look to play a little bit of I'd maybe look to scalp against the highs because it's a really tight stop. Other than that, guys, you're looking for resistance triggers, not support triggers. The bias is up. The near-term formation is constructive. The momentum signature has been constructive since the start of the week. There would be no reason that we should be looking for a stop to begin with. And that's my only point I wanted to make on this one, Tiffany. I think had this given us a decent trigger as a downside entry, sure, a stop against the highs is very well suited. I'll put a stop against the weekly high any time of day, or any day of the week rather. But there just wasn't much here to suggest that we should be looking lower. And in fact, this break actually divided or broke above the median line. So objectively, okay, irrespective of everything we just said with the triggers, objectively above this median line, you stay constructive. You stay constructive. So, yeah, we're scalping. 5-pip stop, in my personal opinion, just doesn't give any room to breathe. Okay, if markets were in a vacuum, maybe that type of strategy would be good, but very, very, very tight stop is difficult to work with. Now, in a trade like this is something different. We talked about 118.91 being the level of which long sides are at risk. That's backed by the median line of the current operative ascending pitchfork formation. You're getting divergence into the highs, price action making a higher high, the oscillator making a lower high. So yeah, now I'm starting to look for short entries, but I still haven't gotten a trigger, and I still haven't even broken a session opening range. So on that standpoint, I need to remain vigilant, and I need to remain on the sidelines here, looking for the market to give me that conviction. Went on a little tangent there, guys, but I hope it offers some clarity as into the insight of how we're looking to actually execute these scalps. Chintan says, oh, yeah, nice quick reminder. Thanks, Mike. I appreciate that, Chintan. I hope it really helps, brother. Again, you're on the right, you have all the right sort of tools available to you. We just want to make sure that, we're always doing what's in our best interest. And in a market where our bias is up, yeah, you might be able to squeeze a 15-pip pullback, sure. But why? Why try to time that and be so nimble when we're in the uptrend? I'd rather be looking to buy a pullback into support. Okay? I'd rather be looking for long triggers. Okay, so there's some food for thought there as far as intraday trading. Eileen says, I need to hear this. This year goal is for better entries. Absolutely. And Eileen's been with me for a while from Daily FX. Guys, with a strategy like what we're working with here, the entry is paramount. Okay? More than where your limits are, more than where you're executing your ranges is the entry. Why? Because inherently your stops are tighter. So if your stops are tighter, you don't have that much room to be wrong. Okay? So it's all about the entries. And once you really be able to nail down being comfortable with pulling the trigger on the entries, navigating out of the trade for me is fun. Let's take some profits here, bring your stops to break even. That's sort of where you have a lot more flexibility. But the initial entry, and specifically because we're a little bit more highly leveraged for sure on these scalps, right? The entry is going to be paramount. So I hope that helps. Dale with a nice amen. Cheers, mate. On that. Dale with another question here saying, Mike, for the new traders, could you talk a little about account management to protect yourself from an event like happened on Friday, such as you do use multiple accounts with the same broker or multiple accounts with different brokers, things like that. If not the venue for this question, no worries. Thanks. So Dale, listen, guys, I don't want to get I don't want to get too much into detail or start up a discussion about what happened last week. Dale, you want to know a little bit about, account management and risk management? If you've been following me for the last 3 years, you've heard me say it on more than one occasion. And again, I don't want to start, throwing jabs at people who are holding long Euro Swiss. The Euro Swiss trade for me was not a technical trade. It was not a trade setup. It was not even a trade opportunity. It was a gamble. You're putting a long based that the central bank is going to maintain that peg. There is nothing to tell you when they're going to remove that peg. There is nothing to tell you when they're going to change that peg. There's nothing to tell you anything. And the technicals don't mean anything in a market where there is artificial forces such as a peg in place. Okay? It means absolutely nothing, guys. The technicals don't mean jack. So for me, if you're looking to, if you want some remarks, Dale, on how to protect yourself and how to keep your account safe, stay away from trades like this, guys. There's no free rides in the market. If someone's telling you, hey, long Euro Swiss, there's a peg there at 120, it's an obvious trade, that's the direction away you want to run, okay? When someone comes to me with a comment like that, I'm running in the opposite direction right off the bat. So that's all I'll say on that. As far as your accounts, guys, listen, I have a longer-term trading account and a near-term trading account, and that's just because we can't hedge here in the United States. So if I want to take short-term exposure against a longer-term bias, you can do that. Whether those accounts are with the same broker or not, Dale, at the end of the day, nothing that happened with FXCM was risk to client assets. Okay, if anything, it was a regulatory affair, which the excess capital on hand was below the requirement, not client funds. So even in a scenario like that, I don't really think that your funds per se were at risk. So for me, more so when you're picking your broker, it's all about the platform. It's all about execution. Okay? And that's all I'll say on that, but I hope that helps. And one other thing is when you see a massive move, the most devastating part to me, guys, about what happened last week, for those who were caught on this, is not necessarily the guys who are caught holding Euro Swiss longs. I mean, that was a certifiable gamble that they know that they were taking, right? It's the guys who tried to trade after the break. Guys saw this breakdown, and all of a sudden they're putting in orders to short. Well, they got filled at the lows, and the market doubled back a couple hundred pips and stopped them out. So don't think, you can easily navigate those massive, unprecedented, historic moves. When I saw what happened, guys, the first thing in my mind, step away from any Swissy pair, period. And I'm a scalper. If there's anyone who's going to be willing to take a short-term position, it's going to be me. But on a move like that, I won't touch that with a 10-foot pole. Okay? Let the market settle. Let the dust settle. There's a lot of people who are still, dealing with the aftermath of that. And then we'll take a position after price has had an opportunity to range. You get some bids in there. You get some offers in there. Let the price adjust. and then we'll use that price action as the market starts to wake up in some of these Swiss crosses to formulate a trade plan. I know for near-term traders like us guys, when you see things like this happening and you see major moves, inherently we want to jump in, right? We are shorter term in nature. We look for these near-term price opportunities, but for a move like where you get a historic, move that takes out multi-year ranges in a singular day, for me, guys, prudence will kick in full force here. So, Dale, I hope that helps, man. He says, thank you so much for your answer. I appreciate that. On that front. All right. So after our quick segue onto the Swiss disaster, let me know if you guys have any other questions or trade setups that you want to cover before we close the session here. The focus, guys, is going to be for me at least on the dollar yen, possible gold exhaustion as you head up into these resistance targets, and to see if 83 holds on sterling CAD. Those are the three trades I'll be really focused on as we head into the close of trade today. The Aussie dollar is I'm falling out of love with it, but I do want to see a nice reversal here and a hold to push higher. If we break below the 81 handle, like I said, this region of support here, pretty much game over, sayonara, and we'll look to see a break below that 80-40 level to really get this thing going. So that's sort of the main setups I'll be focused on heading into today's trade. We will be back up and running tomorrow morning at 8:30 again for another live scalp intraday trade session here. I will have the archive up of this session within the hour here, guys. Just got to upload it, and you'll see that posted on SB Trade Desk. So if there are no other questions, we'll go ahead and wrap it up here. Best of luck trading, guys, and we will see you all tomorrow. Eileen says, fabulous class, Michael. Look forward to the week. I appreciate that. Jay saying, I'm glad you mentioned prudence versus gambling, the mark of a successful trader. Cheers, Jay. I appreciate that as well. Adrius, Chinta, see you guys later. My ATR 25% never lines up with yours. Dale, make sure when you're double-clicking, when you open this, that under the data source, you select day, okay, and set that as the default. If you take the ATR and you go into a 30-minute chart, it's going to take the ATR of the 30-minute chart, right? Where you want to make sure we're always looking at a quarter of the daily ATR. So just make sure the data source is always selected on the day. And you should see those line up better. He says, okay, thanks. All right, guys.